Welcome to Mission to Grow, the small business guide to cash, compliance, and the war for talent. I'm your host, Mike Vannoy. Each week, we'll bring you experts in accounting, finance, human resources, benefits, employment law, and more. You'll learn ways to access capital through creative financing and tax strategies, tactical information you need to stay compliant with ever-changing employment laws, and people strategies you need to win the war for talent. Mission to Grow is sponsored by Asure. Asure helps more than 100,000 businesses get access to capital, stay compliant, and develop the talent they need to grow. Enjoy the show. CTA, the Corporate Transparency Act. Hi, I'm Mike Vannoy, your host of Mission to Grow. So we're going to unpack a law that I think most business owners have no idea exists. This thing passed back in 2021, but there's a good reason most businesses didn't know about it is because you didn't have to comply directly. Your bank complied for you. What the heck does that mean? We'll unpack it all today. Got a great guest today, Chris Bell. Chris is an attorney. He heads the compliance work at Asure, specializing in money transmission, Bank Secrecy Act, anti-money laundering, know your customer, et cetera, et cetera. Interesting. Chris actually has a background. He used to work for the state of Texas banking regulators. He was literally part of the team that helped write the rule book when it comes to money transmission laws, anything that deals with moving money for banking and now payroll companies. He's at a front row seat. So welcome to the show, Chris.
Thanks, Mike. Glad to be with you again.
So let's maybe start out, if we could, Chris. Definitely. Let's first help because I think most people don't even know what CTA, the Corporate Transparency Act, is. So let's define it and then probably unpack why it is that up until now, it's been okay to not know what it is.
Absolutely. So, Mike, what the CTA, the Corporate Transparency Act, this was a law that Congress passed in 2021 that essentially rewrites the laws regarding the collection of what's called beneficial ownership information in this country. And I like to think of it, in the words of Stephen Covey, a paradigm shift. Right? Under the old paradigm, when anytime a business went into a bank to open up an account, a loan, any financial service, the bank would ask that business a few questions, right? And one of the questions, ever since Dodd-Frank, has been, please disclose owns this business. Business owners will be familiar with having to disclose any owner that owns 25% or more of the entity, as well as, the individual who exerts the most control over the entity. Yep. So paradigm is shifting because now, as a result of the Corporate Transparency Act, instead of banks asking that question of businesses, now Congress has changed the law to say, businesses, you must proactively register with the federal banking regulators and provide the same information that you would typically provide to a bank just directly to the government. And then the government's then telling the banks, hey, thanks, you had to ask these questions. Now you can simply log on to this database that the regulators have built so that you can fulfill your collection requirement.
So it seems obvious to me why this sat with the responsibility sat with bankers. Yeah. I'm going to loan you money. You're going to open an account in my institution. I'm going to be obviously in the middle of moving money for you. Stick me in the middle of preventing the bad actors here, right?
Right.
Why do you think that the Congress made this change? This seems like, we do our best on this show to advocate for the small business owner, and they're getting crushed administratively. The thing I maybe worry most about this one is they just don't even know this is I've seen zero articles on Wall Street Journal, zero on CNN, Fox, CNBC. I don't see any news about this, but all of a sudden here's this new regulation that's hoisted upon the responsibility of small business owners. Why? What's driving this?
So, for a long time in this country, we have been trying to get to the bottom of shell companies and find bad actors, find the people who are financing terrorists, people who are doing money laundering. And when the edict first came from Congress to get to the bottom of this, they place the onus on the financial regulators because, financial regulators deal with money, and deal with money, you have to deal with money laundering. So the financial regulators, well, who are their main constituents? And well, that's the banks. So they said, okay, we can make a small in their words, a small operational change to the banks, so that on the front end, when account is opened or a service is rendered, these questions get asked. I personally see the shifting of the onus from banks to small businesses, or just businesses in general, as probably the result of some good lobbying efforts by the banks. The banks are getting in trouble and getting fined into oblivion when they break the AML BSA info collection requirements. So they said, look, we're tired of in the middle of this. And even though we may be in the best position to gather this information, we're just tired of the fines and the overregulation. So they lobbied Congress and said, Congress, you take regulatory burden off of us and just put it directly on the business.
Yeah.
And banks have much better lobbyists than just business in general.
Yeah, and I hate to be so cynical, but it probably is as simple as that, right? And it probably sounds really simple. Hey, the business had to provide this information to you, the bank, anyway. So how about they just provide it to whatever agency this is? Easy peasy. Problem is, most business owners are busy working their face off to run their business. In like I say, I have not seen this on the news. This is not some big, no billboards telling everybody, business owners, that they now have to register. So I think that's why this topic is really, really important. It's just maybe a bit of a dry legalistic topic we're covering today, but super, super important because no one's talking about this. Chris, what if you had to say one thing that you want people to walk away from it? We're going to talk here for maybe an hour-ish. What one thing is really important that small business owners understand about the Corporate Transparency Act for 2024 if they're trying to grow their business?
Sure. And, I guess my key takeaway from this is to remember, if you are a corporation, a limited liability company, any business form where you had to file with the Secretary of State to create your business, then if you don't meet one of the 23 exemptions under this new law, then you will have a reporting requirement annually. If you don't meet that reporting requirement, then you're going to pay some fines. And we want you to avoid that, because the requirements are actually really simple to comply with, but it's just one more thing that you have to do instead of running your business. You do have this reporting requirement. So that's the thing I want people to remember, is just not to forget about this. Make sure you check this particular box.
So let's talk fines. What kind of teeth does this have? If you don't follow whether it's because you thumbed your nose at it and said this is stupid, or whether you didn't comply because you didn't know, which would be the case in most for most folks here. How bad could this get?
Okay. So I'm going to answer that way. I'm going to answer that question in two ways, right? First, there's always money, and $500 a day up to $10,000. So essentially, you'd be looking up to a $10,000 fine for not complying with this law. When you get into looking at it, thumbing your nose at it because it's stupid, then, or as the law calls it, willful noncompliance, actually be looking at jail time. It actually carries criminal penalties in addition to the civil penalties.
Wow. Okay. So probably not making some predictions that people are going to go to jail, but this is a criminal act not to follow. This might sound small and simple, but this is real deal. You gotta follow it. So $500 a day up to $10,000. When does the clock start ticking? When must businesses comply with this law?
Okay. So this answer comes down to, I know Mike always likes to laugh at me when I say every lawyer's answer always starts with the phrase,
let me. Yeah, I was going to say, I'll finish the sentence for you. It depends. Yeah, right.
So It depends on when your business starts or started. If you were in operation on 12/31/23, you have until January 1 of 25 to get registered. If you come into being, if you're formed after 1/1/24, you have 90 days from the day you are formed under the state laws or wherever you're formed to register with FinCEN, the federal regulator. And FinCEN is just a group a group of federal banking regulators all in one group called FinCEN.
Okay. So basically 2 buckets. You've got to comply by Jan 1, 25. If you're an existing business, you've been around for a while. If you're a new business, you have 90 days to comply from what, articles of incorporation, something like that.
So anyone who actually wants to start diving into the literature on this, when the act was first passed by Congress, it was actually 30 days. But through some good lobbying efforts, that 30 has now been changed to 90. So if you form, from 1/1/24 forward, right, because this goes in perpetuity, you have now 90 days after you're formed to register with FinCEN.
So before we get into the mechanics of what technically someone has to do, because I do think it's pretty simple, you're gonna make that clear. Can you back into maybe the broader picture? It's this beneficial ownership. A lot of people, I think, were first introduced into this concept 2020, filling out PPP loan applications. Beneficial ownership. What does this mean? Do I qualify for PPP? Do I qualify for ERTC tax credits? And I'll kind of answer my own question a little bit. Basically, a lot of these programs are trying to understand tax credits, the ERTC. Wonderful thing. Get it if you can still before the clock runs out. But it was meant for small businesses. And so if it's meant for under 100 employees, and I've got 3 businesses, 50 employees each, but I own all 3 of them, different EINs. Well, I own one entity. I have beneficial ownership of a 150 employee company, and I don't qualify. Right. So this beneficial ownership concept, I think, is all over the IRS code for different reasons. Can you kind of back into why is the concept of beneficial ownership so important when it comes to the Corporate Transparency Act?
Sure. And so, as the name implies, corporate transparency, what they're really trying to crack down on are shell companies that are being formed to facilitate money laundering or terrorist financing.
Yeah.
So if you can isolate, and look behind the corporate veil and say who owns these companies, right? Then you are in a much better position theoretically to curtail money laundering and terrorist financing.
Yeah. The only thing I know about money laundering is from watching the show Ozark. But I think you learn a lot watching that show. But it makes sense, right? So that you're not going to create a bunch of shell companies and all you're doing is moving money from one pocket, from your left pocket into your right pocket, from this company to that company. And so ultimately they have to have EINs. If they roll up to common ownership, that's how they can track the movement of money. Am I saying that right?
Yeah. And they're looking behind these entities, right? To say, are you using company A to transmit money to company B, to transmit money to company C, and basically throughout the process, you're turning bad money into good. So the Corporate Transparency Act is going to look at companies A, B, and C and say, companies A, B, and C, you have to register with the federal banking regulators to tell us who owns these companies. And a beneficial owner, under the basically the old and the new definitions, are anyone who has an equity stake of 25% or more, directly or indirectly, right? So let's visualize what does that mean? Because that's a lot of words. If I own company A, I own it 100%. Company A now owns company B, right? Company B is a subsidiary of company A. Well, what the analysis is looking for, I call it the warm body rule, right? You look up the chain to see who, at what level do you have to stop to find a warm body who could own 25% or more. If I own company A and A owns B, then I'm a beneficial owner for company B because I own 100% of the parent company. So I'm a beneficial owner of both company A and company B.
And to be clear, there could be really good, legitimate tax strategy, trust/tax strategic reasons to do
Yes.
very sophisticated entity strategies,
Yes.
right? So
Anyway.
yeah, so we're not poo-pooing the concept of shell companies and wholly owned subsidiaries and the protection of assets across multiple LLCs. There's lots of really good reasons for complex entity structures, but unless you can tie them all together, the government has a hard time tracing the money to know if you're a good actor or a bad actor, right?
Right. Oh, sometimes I think that the government just assumes you're a bad actor until you prove that you're good. But that's actually part of what this law does through the registration.
Chris, let me ask this. So, and to be clear, the purpose of the show is to share the best information we possibly can to help small businesses grow their company, and doing so in a compliant way. That said, there's lots of employment law that it's not like speeding and there's somebody over the hill with a radar gun that, oh, you were 5 miles over the speed limit. In the world of HR and employment law, it's like, okay, it's illegal to discriminate, but I didn't think I was discriminating by hiring someone who could do such and such because they had to lift heavy equipment. But it turns out I'm actually discriminating based on, say, gender or whatever, because I didn't have good job descriptions. So a lot of times employers get themselves in trouble in, I hate to say the word gray area, but it's not like there's the HR police that are looking to say, gotcha. It's usually the result of a lawsuit. A disgruntled employee makes a claim, maybe to a Department of Labor, to the EEOC, to an attorney who files a claim with one of those agencies. How does someone get caught? I want to dissuade someone from thinking, oh, this is yet another HR law. I'll just ignore this one. Like, what does the enforcement mechanism look like for, will people get away with this? And I'm assuming the answer is no.
So, I mean, basically, the way I would think about this is the government actually has a way of knowing who files and who doesn't. Um, you know, every business that I know of has to pay their taxes.
Yeah.
You file a tax return with the IRS. Well, IRS is a member of FinCEN, or at least it's closely associated with FinCEN.
Yeah.
So basically, it would be really easy for the government to say, hey, here is a database of every LLC in the country. Let's just compare that to the BOI database, the Beneficial Ownership Information Database, to see who's on there versus who's not.
Yeah.
It's a pretty easy way to actually catch.
Honestly, that's probably the most frustrating thing to me of all, because as an entrepreneur myself, it's like, I already filed my taxes. You can triangulate me based on my tax returns in the EINs that I filed taxes for.
Yeah.
Why are you putting this on me? And so like, I'm highly empathetic to the small business owner. This all of a sudden becomes yet another thing, right? Maybe before we talk the mechanics of how to do it, which is simple. This is more of an awareness issue than it is a difficulty to execute issue. There are some exemptions. What are the exemptions? I think you said there's 23. You don't have to list all 23. Maybe we'll include that. I will commit to this. We'll get a credible source, an authoritative source of the 23. We'll list it in show notes for people to click and navigate to. But share with us some of the biggies. Who would be exempt from this?
Sure. So I kind of think of these in a couple of buckets. I think of first, if you're a regulated entity, and what I mean by that is you're a financial institution, if you're accounting, if you are a commodities trading business, if you are a business that has to already register with the federal government, then you're probably exempt. That actually takes up most of the exemptions. That's bucket number one, a regulated company. The second bucket would be what's known as the large operating exception. And there's basically two figures to keep in mind on that. Just like you were saying with the PPP, there are certain thresholds. One threshold for this exemption is 20 full-time employees in the United States, especially prongs of physical presence, operating in the U.S., as well as on your tax return having $5 million in gross sales or receipts. So if you are that big, then you're going to be exempt from the from the registration requirements.
It's not if you're smaller than that, you're exempt, which you would think intuitively would be like, okay, we're not going to punish the small entrepreneur here. It's if you have more than 20 employees and if you have more than 5 million in revenue in your tax return, then you're exempt. So this is really only a requirement for smaller businesses, AKA Main Street, right?
And that's, I have philosophical differences, of course, with this kind of, law. I could reason that maybe the reason they're trying to exempt larger companies is if you're a larger company and you have that many employees and you're doing that much in business, maybe they just presume that you are a legitimate business. Remember, they're trying to catch the non-operating shell companies with this law. But
that's reasonable because if you're a bigger company, whether it's reasonable or not, I'm just trying to rationalize why that might be. If I have more than 20 employees, presumably some of them are not family members or part of my criminal syndicate because I'm paying them W-2s and therefore I'm filing taxes. They're filing taxes. Maybe this is really targeting the micro business with few to zero employees who a shell company may be solely set up for the movement of money. Is that probably a good way to think about it?
Yeah, absolutely. And, assuming positive intent, that's exactly that's how I would say it. Unfortunately, right, I'm an attorney in the real world and I look at the practical effects of what this does. And what this does is it saddles, the mom and pop shop on Main Street with one more regulatory burden. It's not hard to comply with, don't get me wrong, but failure to comply can, set you back 10 grand. And when I think of, Mike, the sole proprietor of Mike's Pizzeria, getting hit with, $10,000, while his profit margins are already razor thin, while the government has some reason for doing things maybe the way it's doing, the practical effect is Mike at Mike's Pizzeria is the one to suffer because of this presumption.
Yeah. Yeah. No, that's exactly how I feel. Like I understand I'm all about stamping out crime and whatnot, but and the burden is just so high on business owners these days. It's every time there's a new law passed, there's not an old one that goes away. It's they just keep stacking up on top of each other.
These are cumulative. They're like snowfall.
Yeah. It's you lawyers. It's your fault.
And then that third bucket is if you are a subsidiary of one of these other types of companies, then you're likely exempt. If you're only doing this, if you're exempt at your parent company level, make sure to look at the exemptions, specifically the subsidiary exemption, because there are some exceptions to the subsidiary exemption. For example, one of the exemptions under the regulated company bucket is for a money service business at the federal level. Of course, I am a regulatory compliance attorney for a payroll company. We're registered, with FinCEN as a money services business.
Yeah.
But we have that registration higher up on the corporate organization chart. Our subsidiaries under that would not be exempt just because there's a subsidiary of a money services business, for example. So if you're relying on a subsidiary exemption, make sure you look at it closely, make sure you really fit in those, in one of those buckets.
Okay. Any other legal aspects that business owners should be thinking about and be considering when registering with FinCEN? And I think that's probably where we'll wrap on just the practical steps of what and people, I think you're going to be shockingly disappointed at how simple it probably is going to be, and we'll provide the links. But it's so critical to get it right. So what other considerations should business owners be making?
Well, and we, to step back, right? What kind of information am I reporting as a business owner? Basically it's normal stuff. It's your name, it's your date of birth, your address, your social security number, and your identification. Identification being your driver's license, your passport, any of those government issues.
Personal identification, not tax ID you're talking about so far.
Yeah. Correct. Because the business owners are reporting personally that they personally own these businesses.
Yeah.
Right. So, same kind of information you have to provide as a person when you open a checking account. That's the kind of information you're going to have to provide here. Something practical, make sure your ID is not expired, because you're going to have to upload a copy of it to FinCEN and their website. So make sure that if you're going to use your passport, make sure it's not expired. Same thing for your driver's license. So it's something small. I just know that anytime I need a current document, I never can lay my hands on it.
Yeah. Yeah. All right. So let's get down to it. So you keep talking about this FinCEN thing. What the heck is FinCEN? Lay it out, who the organization is, and what very specifically does a business owner have to do to register with FinCEN?
Sure. So FinCEN is basically a group of federal bank regulators. And FinCEN has a website that you go to.
Is it an acronym? Does FinCEN mean something? That fintech? What I mean?
Yeah, I'm sure it does. It's just not something that I keep on the tip of my tongue.
All right. I stumped the attorney. A good thing for me.
There you go.
Mike 1, Chris 110. There we go.
Well, I'm sure, FIN, of course, comes from financial, and CEN comes probably from the word central. That they wanted some central regulatory authority over the other federal banking regulator.
Yeah.
But FinCEN.gov is their website, and if you go to FinCEN.gov, there are links right now to I think they call it BOI reporting, beneficial ownership information, BOI, because the government can't resist an acronym, whether it's good or not. And you'll go through and click on the buttons. There's a online form to fill out where you'll put in all the information. There are buttons to attach copies of your government identification, and you submit. Practically, as an attorney, I would always say make sure that you're printing proof of your submission. I know when I file with FinCEN on behalf of the Asure family of companies, I always do a print of the form itself into a PDF, stick those PDFs into the file. I do it on the form I'm submitting, save the email that I get to say it has been filed. I'm not sure on this one if they do a multiple round of emails. I know with FinCEN, sometimes on the registration, they email you once to say, hey, we got it. Then they email you again to say, okay, we accept it. And then I go a step farther because I'm paranoid about the government and its fines. Usually you can actually go and search these to see if you're filed. And I'll actually search and then do a print screen of the results showing that I registered. And I just
any practical advice for the somewhat less OCD among us than
I treat this just like I do tax returns, right? I keep them for years, and That way, if anyone from the government shows up and says you owe me $10,000 because you failed to register, I pull out that email and go, nope, I registered. It's right here.
I mean, we're in my practical business owner hat, running around with hair on fire, trying to keep your business alive and not worried about administrative crap.
Mm-hmm.
Take this thing out right here. Take a picture of the screen. It's going to be instantly uploaded to the cloud and never think about it again unless you had to. So, I mean, I think it's really good advice, Chris. I joke. Those are probably the most extreme right way to do it in backups of your backups and paper and whatnot. But I do think it's really smart to, if nothing else, take a picture of your screen. And if you're on an iOS device, it's going to be up to the cloud, and Android, same thing. I mean, so lots of really easy ways to create some backup for this to make sure you're covered.
Well, I just think of these as, that's a $10,000 email. I mean, that's one I don't want to lose.
Yeah, that's a smart way of thinking about it. Chris, anything else that you'd want to share with our viewers? So you mentioned the website, FinCEN.gov. We'll put the link into the show notes for everybody. The law itself, you said there's 23 exemptions. You listed some of them. Basically, all mainstream small businesses are going to have to comply with this, but I want to provide a link to make sure people can understand and read the exemptions. Quick question. If you qualify as an exemption, this seems painless enough. You may as well register anyway, right? If you're unsure.
I mean, if you're unsure, I don't really see why it would hurt.
Is there, can you think of a downside?
Well, I personally don't like to do anything unless I have to, especially relates to talking with the government.
Yeah.
Because anything you say can and will be used against you at some point in time. And I don't want to. I personally wouldn't register, and if I clearly met an exemption, because if I meet it, but I register out of an abundance of caution this year, but I don't next year, and I go, oh yeah, I don't really care, I was exempt anyway. Well, then you have to spend a lot of time, maybe later, explaining why you didn't register.
Okay.
So I just don't want to.
So I think that's good. That's good feedback. So the mission here is read the rules. We'll stick them in the show notes. If you qualify under one of the 23 exemptions, don't. If you're not sure, ask your attorney. Get a professional opinion. But if you think you qualify, if you think you don't qualify for the exemptions, then you click the link we'll provide. You register with FinCEN. It's probably, I'm guessing it's just a few minutes, not a difficult job to do, and you're good. So a super simple thing to do could be super expensive not to do it.
Well, okay. As I've told you, Mike, one of my favorite clients in a former job had an email signature that said, if you think compliance is expensive, try non-compliance.
Yeah, right. That's right. Chris, always enjoy talking to you. Really very much appreciate your expertise, not just from a legal perspective, but I think just the practicality and real world view that you bring to it. So thank you. And thanks to everybody else for joining Mission to Grow today. That wraps our show. Until next week, if you got value from today, like, share, comment. We'd love to bring this information to all small business owners. Thanks. Until next week. That's it for this episode of Mission to Grow. Thanks for joining us today. For show notes and more episodes, visit us at missiontogrow.com. If you found this content valuable, I invite you to share it with a friend and subscribe to the show. If you really want to help, I'd love it if you left a 5-star review on Apple Podcasts, YouTube, or wherever you listen. Mission to Grow is sponsored by Asure. Asure helps more than 100,000 businesses get access to capital, stay compliant, and develop the talent they need to grow. To learn more about how Asure can help your business grow, visit AsureSoftware.com. Until next time.